Hi guys, so here we're going to be covering the support and resistance today. This is one that I've already made up, but I also have one Euro USD which I don't trade, but I've simply opened it up here, as you can see on the right hand side of the screen. I've opened it up, Euro USD. I never trade that, but at least we can show you on there how you would identify support and resistance areas. All right, so let's see, why is this a mess? I don't know why that's so messy. It shouldn't be. Normally it's not. Oh, that's why. Yeah, oh, there we go. That's why it's too zoomed in. Okay, so if you look at my left-hand side of the screen, this is my actual trading platform. And if you look at the right-hand side, this is for my analysis, if you like, where I set my um, resistance and support lines. And like the blue is the extreme peak formation, or the extreme anchor point, the extreme lowest point. That's represented by the blue. So I know if it hits here, it's at a major resistance and support area. All right. If it's yellow, one of these yellow lines, which you can drag and drop and move around, it means that it's at a moderate area, like one of these here, one of these, one of these, and you go. So let's go into Euro USD. For support resistance, what you are looking for is you want to see where the markets went to before and got rejected. All right. So let's have a look at this area here, because it's very clear for you. This here is a bit messy, so you wouldn't even bother touching any of this to trade. All right, you would just ignore that. That is a mess. It's just consolidation and ranging, as people call it. Okay, this is the same, consolidating and ranging. What you want to be looking to trade is a trend formation. So this is a trend going long, as you can clearly see here. It goes from bottom to top. This is just massive consolidation. I mean, look, if you're a scalper or whatever, you can certainly trade in these ranges. But me, really, as a day trader, when I see this, I stay away from it. I don't bother trading any of this because I'm a day trader. I look for trends. So I'm either looking for an uptrend, which is from bottom up. You can clearly see it's moving up. This is moving side to side, so it's no use. Or I'm looking for a downtrend, if we can find you one. There we go. You can see it clearly here. Look, this is flat again, but you can clearly see this is a downtrend. So this is what I look for to trade. And you can clearly see here is another downtrend. Here is another downtrend. See? Well, this is fairly flat around here, but you can see, like, comes into a downtrend, flat, consolidation, fake move. It's just a large fake move. That's all it is. Consolidation, downtrend, consolidation, downtrend, consolidation, and then down again for giving you your kind of final bottom before it then starts to reverse and start going long. All right. That is essentially what I'm looking for to trade. But as I said, if you're a scalper, scalpers will definitely be trading in these ranges here, 1,000,000%. All right, because that's just what scalping's all about. I look to get in around here. I would probably have missed this because it hasn't really done anything that I look for, but I would have got in here. This gives us a perfect W. Can you see that? Or a double bottom, but I just call it a W because it looks like a W. So, keep it simple. I actually got involved in this. No, sorry, I didn't. That's Euro USD. I didn't. I got involved in a very similar trade to this, GGA, which I'll show you in a minute. But this is a perfect trade for me to take up to here. So what you're looking for your support and resistance areas is an area where the market has moved. It's tried to push through and it then got rejected, and it was essentially not allowed to go any further. And there could be multiple areas of this. So here, where it's what we call the peak point, some people call it an anchor point. Sorry, this is an anchor point. The peak is at the top, and this is an anchor point. So what I do at the extreme anchor, the bottom, is I paint it blue so that I know later on when the market comes back down here eventually, I know that that's the extreme bottom, and it's a huge opportunity for the market to then get rejected and go long again. And then if it breaks through here, what it will tend to do is it will go like this. Let's say it comes down, right? Comes down, it breaks through here. It will come back up and retest, and then it will come back down like this. That's how it works. All right. I don't know where my RSI lines went. Great, we'll find that later. But what we can do is we can look at these areas here. All right. Oh, sorry, it's up here. Where are you? I want to put it at the bottom. There we go. Sorry for that. So look, what I do is you can zoom in, like you can pull it all in, and you look for areas where it got rejected. So, I mean, if you're looking at the screen now, you can see it a mile away. Here to the left is a massive area of rejection, right? So bang, 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 bang. Then it finally broke it. And then it comes back up, tries to break it again, but it just doesn't quite make it. It rejects around here. So you can see where's the lowest point before. There is the lowest point on this side. You see that? And you see how it comes back. I mean, look, I know it's not pinpoint, but it is still within one or two candles. Let's zoom in and have a look. You see how amazingly that works. It's still within this area here and gets rejected, bang on it, and then it goes. And that happened from all the way over here. It's a strong area of resistance, which then created this support, which then tells you that it's going to keep moving up. So this, for me, it rejects on the previous support. It gives me a double bottom, and it then breaks past this. I would actually enter here, but I would enter a second position at this pullback here to let it carry on. The fact that it's done these that's more than enough confluences / indicators for me to take this trade. All right. And then you're looking for 3 levels of rise. 1, 2, 3. It's giving you a 4th, but that's fine. And that's all you're looking for, the 3 levels of rise. So here is one support area here. Okay. Your next area of resistance is going to be this area here. So when you put that in there, you can see, look, that got rejected here. This area of rejection, once it is finally broken through, then becomes an area of support, and it stops this from running on down here. So it gets rejected here. Both of them are rejections, but remember I said the top part is what people call the rejection, and the bottom part, like this, becomes a support. So you can see, you have to remember when you're on this market, it's going to be like this. You're then going to go, okay, here, look, there's a previous rejection point. Here's a previous support. Let's have a look. Bang, bang, bang. The market moves. As you see the market coming up, you close out your positions, and then you see, look, rejected. Tries to break here 3 times, rejected, 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 and then runs. Now, the reason why he does this is a fake move or a fake out, as people call it. He does this because you have a thing that's called a breakout trader. It's a style of trading where the minute it breaks out, they'll jump in and trade it. I would actually trade here. See when you get this M, bang, bang, you get a triple top. I would trade this going short. It's a counter trend trade, all right? But you'll get breakout traders. And this is the reason why the market maker pulls a couple of candles going past, but doesn't quite bring it down. And he then traps them, because the minute people place sell orders here, he very quickly whips it back and goes long. And that is specifically and purposely done to trap breakout traders. Now, the trading guys, we would never have traded this. Why? Because there's too many areas of support and resistance here. Look, they're everywhere. There's one there. There's another one there. You see, look, bang, 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 bang. There's another one. So we at the trading guys wouldn't have been caught out with that. Why? Because we don't touch these cells because there's too much resistance here. All right, and I'll remove that. Sorry, I just want to remove that one, don't I? So you can see the point on that now. And excuse me, guys, it's quite time consuming. I don't want to remove it all in one go because there's some good ones here. Okay, so now I've cleared that up. Then let's have a look at some more areas of interest. Again, you have got another one here where it's a resistance, area of resistance, and then you see it's broke through, bang. Remember, look, it's been bouncing around here and it's finally broke that. And then you would then take this trade at, I'll show you, hold on. You would then take this trade at the passing of these wicks. Some people wait for it to pass this one, which is perfectly safe. But the minute this candle passes these wicks, that would be your entry as a buy order for that. And then you can see your stop loss would be here anyway, below the previous lows. And you can see once you enter above here, your stop loss is pretty much never in any danger of being stopped out. Okay, let's make it smaller again, show you the areas overall. So then there's a couple more. And look at this. Look, see the one that we've just made here? We've literally just put that in, right? Now, although these didn't reach it, look at what's happened now. This was an area of resistance, bang, 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 and it finally broke. Now, what, a week later, as it's finally came through, 5 days later, whatever it is, you can see here, this is called a high top retest. It's when the top of it goes flat and it keeps retesting the top area. It's called a high top retest, all right? And eventually it gives way. So how you would end up trading this is you would essentially put your trend lines through here at all the touches. And then as soon as this candle breaks your trend line, you would then trade that, okay? I personally wouldn't, but if you were going to trade this, that's what you would then look for, okay? Now, as you can see here, as this has came down to push past the previous support and resistance lines, which are here, the previous support, this previous resistance now becomes a support, and it's stopping that from breaking through. Now, it might break through now, which is absolutely fine. This might push all the way through here and start hammering it, but it also might not. So you can't just see this big candle and say, oh, it's going to tank. It absolutely might tank, and I believe it probably will, but you cannot just base it on that. You have to wait for it to pass this area here. Once this candle breaks below here, then you can get in. What I would personally be waiting for if I was going to trade this is you want to see it something like this. So it comes from here. You want to see it to break through. You want to see it come back to retest, and then you want to take it going short. So this would be your entry when it comes back for a retest to come down here. You could get in for a quick impulse entry here as a scalp. Again, it's not something that I do, but I just know that you can do that if that's your cup of tea. As soon as it breaks this here, you can enter anywhere around here. You can get a quick scalp. Just be aware it may pull back. It can look. It can absolutely just keep running like this. But for safety, for the safest trade, what you want to see is you want to see a pullback and then a continuation run. Okay, that is the safer trade to take based on probabilities. So it's really that simple, guys. And look, when I put it at the new peak point there, at least I know now when the market ever comes back up to here, you know, in a month's time, a week's time, 6 months' time, whatever, I know because I've put that in a big blue block, I know that that's a very, very strong area of support and resistance. Okay, and this is weak, so it can break through and come down. Exactly what it's done here. Look, you see what I was saying here. When this comes up, pulls down, and then cracks on again. It's exactly what it's done here. Look, it's broke through. It's came back for a retest, and then it's went on a run. That's what you want to see happen here. You want to see it come down, back for the retest, and bang, away you go. All right. You might even find that this looks like a head and shoulders if we go to the daily. Let's have a look. Let's have a look. Nah, it doesn't really. So that's fine. Yeah, it's not really a head and shoulders. Not what I would class as a head and shoulders, but that's fine. Let's have a look at the weekly. Monthly. Let's give you a beautiful double top there. Bang, bang, bang. That's a perfect double top. Let's have a look at the monthly. Perfect double top for a short. So look, even here on the monthly, you want to see it break past here for a huge melt if it's going to go that way. All right. So it's dead easy, guys. Sorry. You can see now support and resistance is dead simple. I'm trying not to overcomplicate it. You can see here, you can go back and you can practice it yourself and back test it if you wish. But let's have a look at previous ones here that I've already set up. Lovely double top here on GJ. So you'd be waiting for this to break through past this here to make sure it was going to tank. But then you have to be very careful. Why? Because look, as soon as it breaks through here, let's see, you might have a decent window for. Let's see if it breaks past here. You've got until here. So you've got 52 pips. So that's still quite a decent enough trade to take. Well, it's a great trade to take 52 pips. You want to see if this breaks below here. All right, on the 1 hour. You've also got here, you can see. Wait, I'll remove this one because that is incorrect. It shouldn't be blue. You've also got here, obviously, an area of support. Right below that, you have again got another area of support. That's resistance, sorry, an area of support, and it's the same all the way down. This should really be at the bottom, but that's fine. Look, you can see all these areas of support and resistance, you see, and they just keep coming back. So if I came back to this in a week's time, you're going to see that this coming down bounces through all of these the whole time. And let's have a look back the way and see when it's happened. I might have cleared previous ones, so it might not. Well, look, let's have a look right here. There we go. Look, these are the previous ones. So this yellow line was put in when you look bang on here, and here's a rejection and support area. Look, everything's clear until it gets to here, and then bang, bang, bang. Finally, you can see what I was saying on that previous one, right? We want to see it break through, we want to see it pull back, and then we want to see it run. So it's exactly what I drew on before on that previous one. If it's here, you want to see it break through, you want to see it pull back, which it's done, and then you want to take it going short as it comes down. And you can see here that is exactly what has happened. All right, and it's this in the markets, guys. It's the same patterns that play out time and time and time again. Honestly, the more time you spend in front of the charts, the more you'll see it. All I look for to take trades, as in pattern wise, I look for a W to take it going long, and I look for an M, a double top, to take it going short, and I look for head and shoulders, inverted or normal. That is all I ever look for to take a trade. But I did notice there was one here that had a cup and handle. Where is it? Maybe it's Euro USD. Let's have a quick look. I'm sure I saw it. Where is it? Where is it? That goes down. There was a cup and handle here, a pattern called a cup and handle. I can't find it now, but it was here. And it was textbook. Honest to God, it was absolutely textbook. This here is what I look for. Look at that. You cannot unsee that. That's a W. So I look for a double bottom. Bang, bang, bang. Looks like the letter W. And I get in the second with 1% risk. And then as it breaks past here, I then enter with another 1% risk and I take it up. With my initial 1% risk, once that gets to here and gives me this initial pullback, I close 80% of the trade and I move my stop loss to break even. So my stop loss would have been down here, below the previous lows. As soon as this gets up past here, I close 80% and I move the stop loss to break even at that point. When the candle then breaks past here, I then enter with another 1% and I let that run. And then when it gets to around anywhere in this area here, I will then close another 80% and I will move this stop loss, which at the time would have been here, I will move that up to break even, which gives you the chance to let that run. However, you'll see if I move that to break even, you can see that when this gives you a pullback, that would have stopped me out, which is absolutely fine because it stopped me out at break even, so I haven't lost any money, and I've also closed 80% of my trade at this point. This one, whereas the stop losses at break even here still hasn't stopped me out, and I still have 20% of this trade that got in at a great price, which is left to run and keep running for as long as that goes. And when it gets to this blue section, I'll then look to stop that out. Or even when it gets to here, you could even close 50% of your position and and let the rest run. And that's essentially how it works. I've seen people before that do not believe in support and resistance lines. I think they're bollocks. I personally think that everyone's entitled to their own opinion, but I think that is bollocks because you can go back and back test support and resistance areas for 100 years and you will see that 95% of the time or more they play out. It's the old 80% of the time it works every time. So they're just fantastic. I mean, I don't just solely trade from them, but you can see how easy this is something that we would just avoid. I wouldn't touch that at all. Let's have a look at pound AUD. Look, you see, this is a mess here. This is just consolidation. I would never even look to trade in here. What I would be looking for is to see the break of this and then get in. So even this I wouldn't touch because it's too messy. But I actually got in this trade here and I collected think it was. Oh no, sorry, I am wrong. What I did was I bloody missed this trade here. That's what I did. I missed this for the sell, but what I did, I took this trade here. So this from here to here is what's called a trend trade, okay? Because you're trading in line with the trend, which is short. What I took here is called a counter trend trade. and that means I'm trading against the trend. But when I do that, I'm only just looking to get a quick scalp in. But what I done was as soon as I saw this double bottom here, rejection, I got in here to let me, I'll try and make it bigger. Right, there we go. I got in here. I can't remember. I got in one of these. I don't know if it was before or after this pin, but regardless, this was the region that I got in, and I got around 65 pips or 67 pips I collected from this one. Now, what I do on a counter trend trade, I only use 1% risk, not 2%. If I'm doing a day trade, I use 2% right away. But on a counter trend, I only use 1% and I treat it as a scalp. So as soon as this went up here, and I got to, let's say I got 20 odd pips, I close 80% of the position at 20 odd pips because it could turn on you at any minute. All right. And then I move my stop loss to break even and then I let the little bit run and it comes and it stopped me out. But that's fine. At least I got 80% of 67 pips, right? And that's how I then base it. If you were going to trade this on a trend trade, what you'd be looking for is for this consolidation area to break. You'd be putting in a trend line like this. There you go. You would just really be wanting to see one candle break below this. Okay, so you could as soon as this candle passes through here, you could enter anywhere here, and then you would take that going short. All right, that's how you would do it. I don't go for those trades a lot, but occasionally I do take them. Okay, so I don't want to keep waffling on. I mean, look, support and resistance is really easy enough. It's not a hard concept to grasp once you get the knack of it. It's dead easy. These are ones that I put in earlier. So I just make notes on here. Buys above here, sells below here, below this line here. Buys above this line. This is what you'd call a no trade zone. Why? Because look, it's just a big massive mess. I would never touch any trades in here. That's not to say that you can't. I'm sure there are millions of people who trade in this range, scalpers, whatever. But trading is all about what fits best with you. And I always try and trade the safest way possible. The safest trades in this scenario is anything that moves above here, anything that moves above here, and anything that breaks below here. These are the safest trades in this scenario. All right. Because there's loads of clean range for a good bit. There's no clean range in here. So look, it's full of rejection and support areas. So you wouldn't touch anything anywhere in this range, personally. All right. And that's essentially it, guys. I mean, look, if you look on this screen here, wait, I'll make it bigger. This is my actual trading screen where I place the trades. You can see, look, it's pretty much the same. Look, so when you put this in here, bang, this came up, got rejected here, tried to push down going short, and it encountered a support area. You see that? So when I put this in here, I say, okay, right, that's going to be the support. You cannot see any of this at the time, remember. You cannot see any of this. But look what happens. It pushes through, pushes through, pushes through, comes back down, and it gets rejected at that same point. Look, I mean, yes, it's 1 or 2 pips off, but if we zoom in here so you can see it better, look at this. Look, bang, support, bang, comes all the way down, gets rejected in that same area. Yes, it's not pinpoint, but that's fine. The concept is exactly the same. That is an area of rejection. It then comes back up. This should actually be up here. This one, because it moved afterwards. And you can see this is a huge area of rejection. Look, reject, 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 reject. With 6 candles rejection, same area here. You can see, look, as it came back up, it gets rejected again, bang on here. It's no coincidence, guys. It happens. And then look, see it here, the previous rejection support zone where you had quite a lot of it here, comes across, same here, comes across, same here. You see what I'm saying? And finally it broke through it. But this here is still a no trade zone. You want to do sells below here. When it starts coming down here, you want to do sells. And if it breaks above here, you want to then do buys. But this section here is a no trade zone because it's just consolidating it, and there's far too many support and rejections areas on this. All right. So I hope that was simple enough for you. To manage trades, I use what's called magic keys. I don't know if you know it. It is a fantastic little device. So look, you just simply press open calc. Oh, sorry, if I turned it off. You just simply press open calc, and as you drag this up and down, you can see across here on the right hand side, it gives you your volume, how many lots. It tells you how much money you're going to lose. It tells you the percentage you're going to lose. How many pips is your stop loss. So if you want to make your stop loss, make it smaller, 14. You're still going to lose the same amount of money, but your lot size is bigger. Your lot size is now 2 lots, you see? Pardon me. And it does it all automatically for you. And this is obviously your take profit. You drag it up. Tells you if you get 69 pips, you're going to be up $1,200. And if you want to obviously do that the other way around, you simply hit switch, and it switches them around, so that now becomes a sell order, and it tells you right away. And then all you do is hit open trade when you're happy, and then once your trade is open, you can drag these lines around to move your stop loss, etc. Or you can do it automatically from the console, which you can just hit one single button and it moves your stop loss to entry, your stop loss to break even, and so on. It's a really fantastic device. Over here on the left hand side, it shows you how many trades you've got left for today. You can set that to 2 trades a day, 10 trades a day, whatever you want. This is just default 10 trades. I usually trade twice a day maximum, and that's it. Tells you your risk, what you've lost for the day, and so on. I don't trade Fridays ever, so that's why this is obviously 0 today, because I haven't done any trades. And because I trade 2 trades per day maximum, at my maximum loss that I'm willing to risk each trade is 2%. That then gives me a cumulative of 4% that I'm willing to lose. All right, and then you just hit open calc and it closes it off. All right, simple as that. Another thing I look for when I'm going to take trades, when I look at this here, look, here's the W, look, bang, 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 and it takes off. What else would I be looking for here? I'd be looking here, this is massively oversold. This is the RSI, Traders Dynamic Index, and RSI. This is massively oversold. So this here is look at all your indicators you've got. It comes back, it gets rejected at a previous support and resistance area, right? There's number one. Number two gives me a W, which is a double bottom, but where the right-hand side does not come back and break past the left-hand side. This is done on purpose by the market maker, because if he comes down here, he releases all the funds of the people that he had trapped in here who got in new trades, and he doesn't want to do that. So when he comes down and pins, he's grabbing stop losses, and then he's going to take it going long. This candle, after you see this candle here, confirmation, that's your entry. This area here is your entry. Once you see this candle, this is going to be red at some point, remember. Once this candle then wicks out and this green pushes past this wick, your entry is right here on this trade, and then you take it up. So there's you've got your W, you've got your rejection, you've got your W where the right hand side does not break the left. That's fantastic. You've got it comes down and gets rejected at previous rejection to the left, previous rejection support area. And then down at your TDI/RSI, it's massively oversold. Anything out of these blue lines is oversold. Anything above these blue lines is overbought. So you see in general, when something is overbought, it comes down. Overbought comes down. When something is oversold, it will then go up. Oversold goes up. So that's one of the massive factors that I use in my trading as well. Look, massively oversold, goes up, goes up. So I use that in trading quite a lot. It's you can't just trade based upon that, but it is a fantastic tool. Now look, while we're here, I'm just going to cut this up, but I'm going to show you a quick divergence. This is divergence. So look at this here, which is relative to this up here. You can see that this here is lower and the area on the right hand side is higher, right? So this goes up. However, if you look at the TDI/RSI, you'll see that this area here is way overbought, which is much higher. But this area here, which is much higher on the screen here, is going down the way. This is going down and that is going up. Why is that? That is called divergence. So there's another example of why you could take that trade going short, because you've got divergence here as well. All right. Divergence is a really strong indicator. I really like using divergence as an indicator when the opportunity arises, because it is very strong and it does work most of the time. I'm going to wrap it up here, guys. Thanks very much for watching. I know the videos are basic, but that is done on purpose, because I've been there when you're a beginner and you're watching videos and people just, they talk too much technology terms and forex phrases, and if you're a newbie you really have no idea what people are talking about. So I like to keep it simple, stupid, so that everybody from complete beginner can watch the videos and at least get an understanding for what we're talking about. Okay, but you can see it here, support and resistance, very easy to come by. You might have questions like, well, look, I mean, is that a support resistance? Is that a support resistance? What about this? What about that? They are all support and resistance lines, guys. All of them. So, I mean, essentially, you're going to have blue lines here, here, here. You're going to have blue lines all over the screen. And that is exactly why you have to look for what's called clean range. This is not clean range because, look, there's so many support and resistance areas here, right? This, however, is clean range from here to here. Look at the candles, bang, that is what's meant by clean range. This is messy range. You don't really want to trade in messy range. You can, but it's not the safest of trades, okay? If you want a safe trade, the safest trade is you wait for this to break down past here and you take this going short from essentially here down to, let me just measure that, yep, down to here. That's your safest trade, from here to here. All right, why? Because it's clean range and there's no support and resistance factions there, and you will find more often than not the highest probability that will happen. Okay, thanks for watching, guys. I'm Ryan Mack. Welcome to the Trading Guys. If you want to learn much more in depth, we have a massive community that we're building right now. Everything is going really well in that community, from complete beginners to people who maybe have done previous courses with other people and just ended up blowing accounts and didn't feel that they were getting the right education. We have everything going. We have copy trader, we have PAM accounts, we have signals and setups group. So this, I hate to use the term signals because it's got such a bad name now, but we provide setups. So we show you the whole setup in our group, and we teach you how to trade so that you can actually take the trades on your own without us having to tell you. But on top of that, we still tell you every single trade that we place, so that if you wish to, you can jump on the exact same trades that we place at the exact same time we place, and you can make money while you're learning. So we call it earn while you learn, and we've got about 50 odd members of that right now, and everyone is absolutely loving it. And pretty much every person in that group is making money from that, or else they wouldn't keep subscribing. All right, come and check us out at www.thetradingguys.com. I will put the link in the description, and if you guys want to buy magic keys to make your trades more efficient, I will also include the link with a promotion code down the bottom to get you a discount on that. It's the same promotion code the company gave me, and actually when I gave it to my other friend, it still worked, so I'm happy to share that promotion code with you as well. That's not a problem. Thanks very much. You can hit us up on the Trading Guys on all social media. Trading Guys Facebook, YouTube, Instagram, Snapchat, TikTok, you name it, we have it. Or come and check us out at the website www.thetradingguys.com. Thanks. See you again in the next video. Take care. Bye bye.